As you probably already know, XPENG Stock IPO'd on August 27th, and the stock price shot up from $15 all the way to $23 in a couple of days. In this video, we'll take a high-level look at XPENG's business prospects. Then I'll explain why I'm not interested in this stock at this time, despite the big opportunity. Okay, so basically, buying XPENG is a bet that either the EV market is big enough to support the plethora of existing auto companies and emerging EV companies, or XPENG will be one of the winners out of the emerging EV competition. And quite frankly, both could very well end up being the case. Thanks in large part to Tesla's impact on public sentiment, the EV adoption S-curve is unfolding much faster than previously anticipated. But with the established auto manufacturers converting production lines to EVs and an unprecedented amount of startups, there is bound to be some winners, a whole lot of losers, and eventually, consolidation within the industry. So the question becomes, will XPENG be one of the winners? Well, it's certainly possible, and XPENG has a number of things going for it. First, XPENG is financially backed by Alibaba and Alibaba's co-founder, China's richest man, Jack Ma. This is big. With the addition of the US public markets, XPENG will now have financial security and plenty of capital to expand business very quickly. Second, XPENG is currently actually making and delivering electric vehicles. It pains me that I even have to bring this up as a point, Nicola. And from what I can tell, it's a pretty nice product. XPENG is one of the early movers in EVs. Reviews for the vehicles are positive, with the focus on the driver and passenger experience, comfort, great audio, smooth driving, and even autopilot. This stock has a lot going for it. XPENG is even building out its own supercharger network throughout China. Next, being located in China could be a pretty massive advantage. China has made it blatantly obvious that they are committed to being a major power in the electric vehicle industry. China learned its lesson from its lackluster performance in the internal combustion vehicle landscape, where foreign manufacturers such as Volkswagen and Toyota have dominated for decades. As a result, I expect the Chinese government to continue to be supportive of the EV industry as a whole, and Chinese consumers should continue switching to EVs at a very quick pace. Not to mention, China has cheaper labor and more relaxed IP, environmental, employment, and other regulatory laws, which provides XPENG with certain cost and speed of production advantages. Oh, and the market opportunity for EVs in China is massive, by far the largest in the world. As weird as it may sound, ripping off Tesla can be viewed as an advantage of XPENG. XPENG is not reinventing the wheel, and copying Tesla's innovations is probably a very wise move. In fact, being the quickest, most efficient, and most effective company when it comes to making a Tesla copy could prove to be a very solid business model. After all, a Tesla copy could very well end up being superior to any EV design without Tesla's innovations. And if there's one thing XPENG has already proven to be great at, it's copying Tesla. Check out the picture of its manufacturing facility per XPENG's SEC filing. Does this look familiar? What about this picture of its self-driving software platform? Even the layout of XPENG's website is eerily similar to that of Tesla's. It's even rumored that XPENG stole Tesla's autonomous driving source code, which, although ethically questionable, could prove to be a very valuable move. But this stock has its warts. First of all, XPENG's EVs are direct competition to Tesla's consumer vehicles. This is less than ideal, to say the least. Tesla's pace of innovation means Tesla will likely always be 5 to 10 moves ahead of XPENG. Plus, XPENG already developed its reputation for being a Tesla ripoff type of brand. This is less than ideal branding. XPENG will have to battle it out with all the other Tesla wannabes for market share, and might have to revert to competing based upon price. Again, this is less than ideal and raises profitability questions for a business that is already losing tons of money and will continue to operate at losses for quite some time. This leads to the next wart. XPENG simply doesn't have any strong competitive advantages or a moat. It doesn't have its own massive battery factory or state-of-the-art battery technology. It isn't obsessed with optimizing every level of a vertically integrated production process. It doesn't have a side business to create valuable synergies. like it doesn't have an energy storage or an energy generation synergy business. It lacks a culture of unique innovation and world-class engineers. Mostly, it's just a Tesla copycat. And it doesn't have a strong brand that is synonymous with EVs and sells itself like Tesla does. But perhaps most concerning to me is the fact that Tesla has accused XPENG of engaging in IP theft. If these accusations are true, this would be a massive red flag. The best performing companies have talented management teams with very high integrity. Not only am I not interested in investing in companies with questionable ethical behavior, but this type of management style tends to result in poor financial performance over the long term. Ultimately, XPENG stock could make sense for someone looking for exposure to a China EV stock. There is certainly lots of upside potential in this sector. The EV sector is red hot with no signs of slowing down, so more short-term gains could be forthcoming. On the flip side, it's risky chasing a stock after the price has risen due to IPO hype, as we have seen numerous companies' stock prices fall dramatically in the months following an IPO. Admittedly, I may be biased as a Tesla fan, but I'm personally just not interested in investing in a copycat company with questionable ethics despite the potential of China's EV opportunity. I would need to get more comfortable with the integrity of XPENG's management team and culture of the company. I simply prefer to invest in companies that I am proud to be a shareholder of, and I'm not sure XPENG fits the bill here, at least until I learn more about the IP accusations. Don't forget to subscribe to this channel if you have not done so already to follow along in our discussion of EV and other renewable energy stocks. Let me know what you guys think of XPENG stock. Were you quick enough to buy in at the IPO price before the stock soared? Do you think XPENG is guilty of IP theft? And do you think XPENG will emerge as a winner in the EV race? Thanks for watching, and have a great day.